This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant ratings service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
Let it snow. It's holiday crunch time for retailers. And as wicked weather gets ready to blanket parts of the country this weekend, which companies have the most at stake if shoppers stay home?
Bulking up. Amazon wants something Costco and Sam's Club don't want to give up. Their customers. And the online retailer reportedly has a new plan to take a bigger slice of the growing packaged goods industry.
And Market Monitor, our guest tonight, has a list of stocks that she says could gain 20% or more in the new year. We have all that and more tonight on Nightly Business Report for Friday, December 13th, Friday the 13th.
Wow, good. It's going to be a lucky one, I'm promising you. Good evening, everybody. I'm Tyler Matheson. Christmas now just 12 days away, and for the second weekend in a row, when millions of Americans usually plan to hit the malls, a massive snowstorm will be dumping upwards of a foot of snow in many areas of the country, from the Missouri Valley all the way up to New England. Cold weather is one thing, but messy, snowy weather is another, keeping would-be shoppers at home instead of heading into stores and spending money. That's going to hurt a lot of retailers, but it may be a boon to others at this most critical time of the year.
Millions still reeling from winter weather in the eastern third of the nation. Getting ready to get hit again today, tomorrow, and Sunday.
We have seen over 2 feet of snow here.
Hopefully you got some of that holiday shopping done. Back to you.
Up to a foot of snow is expected inland and anywhere from 1 to 5 inches along the coast. For retailers, it's anything but a winter wonderland. Foot traffic was up at stores over Thanksgiving weekend this year, but total sales were down. A reflection of deep discounts, which may get as deep as the snow in some places if retailers are left with more inventory on their shelves.
Tomorrow I'll be home because I know the weather's going to be bad.
Retailers worried whether shoppers can get to brick and mortar stores are left hoping they'll still buy, even if it means trading bricks for clicks.
Fortunately for me, I've done the majority of shopping online, and everything else I've done ahead of time.
In fact, 35% of the respondents in CNBC's All-America Economic Survey say they'll shop online this year. But in another ominous note, the survey says shoppers will spend almost 10% less, about $57 a head less than last year.
It's because their incomes are lower. It's because they think the economy is in bad shape. There's even some sense that Washington is weighing on consumer spending because 5% said they've reduced their spending in just the past month.
You might be surprised to learn the drop was driven by those with incomes above $100,000. They're cutting back by $300 on average from last year's layout.
So what can retailers in the Snow Belt expect this weekend, and how is the holiday shopping season shaping up everywhere else in the country? Tom Blishock is the chief retail strategist at Booz & Company. Tom, nice to have you back on the program. I know you've been going around and looking at the stores. What do you think is going to happen this weekend? Are the online retailers just going to be the big winners as people stay home and do their shopping that way? What are the strategies that the brick and mortar guys are planning?
Well, going to be a tough weekend with a foot of snow, without question. People are not going to be able to get to stores. But I would expect to see a lot of online traffic this year, actually this weekend. The big weekend for success will be the 22nd. Let's just be glad that we don't have the snowstorm on the 22nd.
If you see, Tom, some fall off in foot traffic this weekend, would you then expect to see a boost in discounting in the coming days?
Oh, absolutely. We're going to see a tremendous amount of deals as the retailers close down these last 12 days. So shoppers are going to get a great deal for the rest of this season.
So you've been talking about 3 trends that are going on: searching, showrooming, and selection. Tell us what it is and who wins and loses from that strategy.
Well, the shopper wins. The shopper really has chosen to get online, do a lot of their, I call it e-showrooming and e-browsing. They've selected their store and then are going into the store for the best deal they can get. So the 3 S's of 2013 will in fact reshape retailing going forward.
Who is winning? Which stores, which kinds of stores are winning from where you sit this holiday season, and which are bringing up the rear? Which are suffering?
Well, it's clear to me that the stores which have a omni-channel or a brick and mortar, click and mortar, and clicks capability are the real winners. Retailers that don't have that capability will find themselves losing out on that growing amount of internet sales.
All right, so give us some idea. So you're talking now about Walmart, Macy's, companies like that that have both online and also the actual stores?
Yeah, I think Walmart, with its integration of Walmart itself with the Thanksgiving weekend, coupled with Walmart.com, has been a real winner. I also think Macy's is in the same kind of boat where it really has driven an integration of both online and offline.
What's selling? Is it an electronics Christmas? Is it a shoe Christmas? What is it?
It's an electronics Christmas, much more than I ever expected. Electronics, clearly home appliances. I saw on the Thanksgiving weekend appliances going out to the door in droves, shoes. It seems to be that this is an aspirational Christmas. What we see is that America has been afforded a tremendous amount of value.
All right, so Tom, I know you've been spending a lot of time walking the aisles in all kinds of stores. At the end of the day, at the end of this crucial holiday shopping season, what are the numbers going to look like?
Oh, I tell you, it's going to be tough. You're going to have a couple of winners. You're going to have some winners, I should say. You're going to have a lot of losers. My guess is a paltry couple of percent over last year, and last year was a pretty paltry couple of percent over the previous year.
Tom, if I want to give Susie a nice home appliance for Christmas, what should I give her?
Oh, I'll tell you what, these crock pots, these $20 crock pots that you link together seem to be really hot. Juicers, coffee makers.
Linkable crock pots. That is what you need, Miss Garham.
Yeah, it wasn't exactly on my wish list, Tyler.
Really?
I'll give you my list.
You like little blue boxes.
Tom, thanks so much for coming on the program. And don't give Tyler these bad ideas. Tom Blishock, Chief Retail Strategist at Booz & Company.
All right, on Wall Street, blue chip shares wrapped up their second losing week in a row. That is the first time that has happened since early October when the government was shut down. In a choppy session today, stocks were flat to slightly higher. Some experts took heart from that after 3 sessions of sharp losses spawned by concerns the Fed may dial back its stimulus next week. Here's how stocks fared today. The Dow up 16 points. The Nasdaq added 2. S&P ended a fraction of a point lower, and it was the worst week for those major averages, 3 of them, since August.
Well, speaking of crock pots, Amazon is cooking up a new service aimed at taking on companies like Costco and BJ's. Investors liked the idea, and Amazon shares rose nearly 1% on the news. Courtney Reagan explains.
It may not be drones, but it could still be a big move for Amazon. The online behemoth is reportedly working on a new business called Amazon Pantry, focused on products often found in the center aisle of grocery and warehouse club stores, like paper towels, cleaning supplies, and pet food. The consumer packaged goods market is a big one, estimated to rack up $850 billion in sales per year. While Amazon has taken market share in areas like electronics and media, the type of goods offered in an Amazon Pantry business are still largely purchased by consumers in physical stores. But that doesn't mean shoppers wouldn't change those habits with an Amazon offer.
Amazon has taken over the world, so why not?
I shop a lot at Amazon, so I definitely find anything I need over there rather than drive to Costco.
My basic cleaning supplies, if it doesn't cost me more, I could buy it from Amazon. But it won't take away the need to go to a Costco, for other things.
Reports say Amazon Pantry would target the retailer's Prime members. Those consumers may then just have to pay a small fee to ship a box full of those items up to a certain weight. The more Amazon can sell and ship in one box, the more revenue each order generates, which helps Amazon offset the shipping cost, which can be hefty for these type of goods.
If this works, though, and they branch out and they do basically what Fresh Direct does, where you can get anything from them anytime you want without paying a service charge, and it comes right to your house basically on a same day or next day basis, they can be a disruptor because they are so big and they have such a huge footprint on the web, people will order from them.
Amazon may be the 800-pound gorilla for traditional retailers, but it's the white knight for consumers, offering a huge selection of goods shipped quickly for little to no additional charge. For Nightly Business Report, I'm Courtney Reagan.
A major merger might be in the works in the telecom industry. Dow Jones is reporting that Sprint may be gearing up to make an offer to acquire rival T-Mobile. The deal could be worth as much as $20 billion. Sprint, the nation's #3 wireless carrier, is controlled by Japan's SoftBank. Shares initially rose after that report. And so did shares of T-Mobile, the #4 carrier. It's controlled by Germany's Deutsche Telekom.
All right, more now on that federal budget proposal we've been talking about all week. Last night, the House overwhelmingly passed a compromise 2-year budget deal that holds the line on new taxes, but restores some spending trimmed by the automatic cuts that were part of a prior budget deal. Now, this Tuesday, the Senate will begin debating and voting on the budget deal. The Senate's not a very happy place these days after the majority pushed through some rules changes limiting filibusters. The debate may get hot. There's a lot of tempers below the surface. There may be some resistance to the bill, but it is still expected to pass.
The Senate will also be voting next week on the nomination of Janet Yellen, slated to be the next head of the Federal Reserve Bank. Also in Washington, Yellen and the other men and women at the Fed will kick off a 2-day policy meeting. Some Wall Street pros are predicting those policymakers could announce on Wednesday that the central bank will begin a program to trim back its stimulus measures.
And still ahead, a milestone in Europe. Ireland will become the first Eurozone country to exit the bailout, and it could mean more opportunities for U.S. companies in the Celtic Tiger. An historic day for the Emerald Isle. 3 years after accepting a massive bailout from the European Union and international lenders to avoid going bankrupt, Ireland has officially ended its bailout. But as Julia Chatterley explains, the nation and its economy still has a tough road ahead.
It's a big day for Ireland as the country becomes the first Eurozone country to exit a bailout program, the result of a property market crash, a banking sector crisis that meant that the country had to borrow over $100 billion. The finance minister told me it was a huge achievement for the country, but I asked him if there was too much pressure on Ireland to be a symbol of hope for the recovery in Europe.
I never got a feeling that we were being used for symbolic reasons. We had a major economic and financial crisis which needed to be addressed, and we addressed it by a series of progressive measures which we implemented on a time frame. And we're at the end of that process now.
So it's seen as a hugely positive time for the Irish economy, but there's also crucial questions about how this country boosts growth from here. It's seen huge investment from the US in particular. We've got companies like Facebook, Apple, Amazon, all with operations here. The finance minister set to head to the US early next year to promote the message that the recovery is on track and there's plenty of opportunities here for US firms. And I think that's the key takeaway from what I've had from being in Dublin over the last 24 hours. Back to you, Susie and Tyler, in the studio.
After 3 days of meetings, talks broke off today between Boeing and its Seattle-based machinists union. That's after the union, representing 32,000 workers, rejected a counteroffer from the aircraft maker over the manufacture of its planned 777X jet in Washington state. Since that same union rejected Boeing's initial contract offer last month, the company has received offers from 22 other states looking to make the new plane.
Well, DirecTV is exploring an online video service to target young people who aren't paying for cable, and that's where we begin tonight's Market Focus. The country's largest satellite TV provider says it's not planning to go up against Netflix, not exactly, but it does want to develop a niche online video service with programming that appeals to specific groups. There were also reports today that DirecTV and the NFL have reached a deal to keep the exclusive Sunday ticket package on satellite TV. But the NFL is denying that an agreement has been reached just yet. Shares were down slightly today to $66.50. A federal judge approved a $5.7 billion swipe fee settlement between merchants and Visa and MasterCard. Merchants had sued the credit card companies, accusing the providers of fixing the fees they charge businesses each time customers use their cards. Now, the value of the settlement, which was reached last year, was cut down for more than $7 billion as some merchants opted out. Thousands of retailers complained the settlement was inadequate. Both stocks ended the day higher. MasterCard up a fraction to $787.97. Visa nearly 2% higher at $207.36. Well, Qualcomm has promoted its COO to the top job at the chip-making company. Steve Mollenkopf will assume the new title of CEO in March. Now, the appointment was a bit of a surprise because there was speculation that Mollenkopf was in the running to succeed Steve Ballmer up at Microsoft as the CEO. Ballmer plans to leave Microsoft next year. Let's take a look at shares of Qualcomm. They were off slightly, $72.58. Well, Adobe impressed investors with its subscriber growth, sending its stock to an all-time high today. The Photoshop and Acrobat maker said it saw a 22% jump in its Creative Cloud Suite subscribers from last year.
At the beginning of the year, we thought that we might have 1.25 million subscribers adopting the Creative Cloud. We blew past that number with over 1.4 million subscribers. And I think the message really is that for consumers, it's a better proposition.
The CEO says he expects the subscriber growth to continue. In that sense, shares soaring, up almost 13% to $60.89.
Well, a different story for United Technology today. Shares fell after the company revised its earnings outlook. The maker of elevators and air conditioners gave guidance for this year and next that just missed Wall Street's estimates. Possible government spending cuts are weighing down its defense unit, which makes engines for Black Hawk helicopters. Shares slipped less than a fraction to $107.35. Honeywell unveiled a $5 billion buyback plan today. The announcement comes as the company's old plan expires. Honeywell CEO said the new program shows the company's confident about long-term growth prospects. Shares rose a fraction to $86.61. AT&T is hiking its quarterly dividend by 2.2% or 46 cents a share. It's increased dividends for 30 years in a row, but the stock was down slightly to $33.85. And good dividend news from General Electric as well. It's increasing its quarterly dividend by 16%. The Dow component will be paying the 22-cent increase to shareholders at the end of January. Shares rose 1% to $26.84.
Well, our market monitor on this Friday says the stock market in the new year will continue to, quote, surprise investors, and in a good way. She's Diane Jaffe, Senior Portfolio Manager at TCW, an asset management firm with $130 billion under management. Diane, welcome. Good to have you with us. So why are you confident that the market can continue to move higher from here? And are you concerned that history suggests that when there's a switch in the chairman of the Fed, see Bernanke, see Greenspan, Allen, there is often a crisis that comes quite soon on the heels of that?
I think you make excellent points, but don't forget that Janet Yellen's been the vice chair under Bernanke, and they're sort of the team that's been putting this whole quantitative easing process in effect, and I think that we'll have a very smooth transition. In terms of the market, I think people are still generally nervous about, having risen so much, is there more to come? And we think that with earnings growth, and remember they're coincident economic indicators, right? They're not looking forward at all. It's what the company's earning today is really going to bolster the market going forward in 2014.
Now, you're going to be talking about a couple of your stocks, and you like the financials. You have a couple of them to suggest. Let's start with State Street. Tell us why that you like this regional firm, and also it's had such a nice move on its stock, as you can see in this chart here. Is there still room to grow if an investor puts new money in now?
We think so. The cost cutting has really done a good job. There are over $400 million cumulatively to date. Their technology is data mining, giving good services to their customers. And so we do believe that it's got 10 to 15% more upside over the next year.
And a lot of their business, of course, in asset management and trust services, I suppose. Now, let's move on to Citigroup, which is another of your choices. I'm curious as to why Citigroup above some of the other choices in the big bank world.
Well, they've you know, they're trading below book value. So when people say, is there still value in the market, I point to names like Citi, because you can still buy it below book value. They pay a subpar dividend because they're waiting for the 2014 CCAR process to go through. And in the meantime, they've been accumulating all their capital requirements for the regulators, so they should be very well situated in the next year's review, and that means that they should be able to return cash to shareholders in the form of increased dividends.
Diane, you have General Electric as another one of your picks, and we just reported a moment ago that they are increasing their dividend by 16%. I'm sure that's going to make a lot of investors happy. But when you look at this stock over this past year, even after this past decade, it's always been somewhat in this mid-$20 range. Why should investors buy this stock?
Because they're finally figuring out how to separate the industrial healthcare business from the GE Capital. And, you know, the target is to be 70% industrials and only 30% GE Capital, and they're making good there. GE Capital has been dividending up to the parent company billions of dollars, and now we're seeing it return to the shareholders in the form of a dividend. They have the highest dividend yield in the industrial group right now.
Your final choice is Pfizer. They've gone through some very tough years. You see them coming out of the woods. How much higher do you think they could be a year from now than they are today?
We do conservatively see at least 20% upside. They have the most improved pipeline of their peer group after the Lipitor, you know, fell off the cliff, and they've done a good job in terms of selling off their nutritionals business, rolling out their animal health business, Oitis, and you know now they're starting to plan the financials for the innovative branded companies versus the generic. So there still could be more restructuring to come.
All right, Diane, do you have any disclosures with respect to any of the stocks that you mentioned there, State, Citi, GE, or Pfizer?
I'm a shareholder in the fund, and in all my funds, and we own those stocks.
So we like that you put your money where your picks are. Diane Jaffe, thank you very much for joining us. Have a happy holiday.
You too. Thank you.
Diane, Senior Portfolio Manager at TCW.
And coming up next, longer odds but bigger jackpots. Why the chances of winning tonight's Mega Millions drawing are worse than ever.
It may be Friday the 13th, but tons of people are feeling lucky today. They're out buying tickets for tonight's multi-state Mega Millions lottery. After more than 20 drawings without a winner, the jackpot has ballooned to more than $425 million, one of the largest in U.S. history. Morgan Brennan has more now about the big rush to buy tickets and the big money behind tonight's drawing.
Good luck, sir. Thank you. Next in line, please.
Hey, you never know. Or so says New York State when it comes to the Mega Millions lottery. The whopping $425 million jackpot in tonight's drawing is the second largest prize in the game's history. That staggering sum breaks down to a $228 million lump sum payment before taxes. But more likely than not, you won't win that nine-figure fortune. Since the Mega Millions revamped its format in October, the odds of winning the grand prize changed from 1 in 176 million to 1 in 259 million. In fact, since the formatting change, no one has won the jackpot, with the grand prize rolling over 20 times now. Still, when lotto jackpots swell to this size, more hopeful Americans flock to convenience stores to try their luck. The reason state lotteries are by far the most popular form of gambling in the U.S., according to past Gallup polls.
This seemed, kind of fun. Like, it seems like a fun thing to do.
But while one lucky ticket holder may draw the right numbers tonight, the real winner of the Mega Millions and its peers is the government. In 2011, the 43 states hosting lotteries pulled in a combined $55 billion in gross ticket sales. That, according to the U.S. Census. And those figures were up about 3.5% from 2010. After prizes, those states netted roughly $18 billion. The top states in terms of sales, New York, Massachusetts, and Florida, were also the states where the most prizes were awarded. So what did the states do with that money? Each state is different.
When I spend $1 on the lottery in New Jersey, thank you,
Only about 59 cents is allocated to pay out winning tickets. The other 41 cents will go towards things like education, small businesses like this one, and administrative fees. In fact, the lottery is New Jersey's fourth largest revenue generator, raking in $950 million for the state last year, and 34% of those proceeds went to funding education and other public institutions. And even though someone could be catapulted into the upper 1% after tonight's drawing, the lottery is not without its critics. But with all that tax revenue on the line, don't expect states to give it up anytime soon. For Nightly Business Report, I'm Morgan Brennan in Passaic, New Jersey.
And finally tonight, Friday the 13th, turns out to be a lucky day for Ben Bernanke. It's his 60th birthday, but he'll probably have to put off any celebrations for a few more weeks. As Bernanke winds down his second and final term as chairman of the Federal Reserve Bank, he'll help decide next week whether to begin winding down the central bank's stimulus plans. And in another month, the former economics professor at Princeton will leave the Fed, but he hasn't given any clues about where he's headed next. So from your friends at NBR, happy birthday, Ben Bernanke, and many more. And Tyler, I wonder what wish he's going to make when he blows out his 60 candles.
I wonder, I think next week they celebrate the 100th anniversary of the Fed itself, and the three living Fed chiefs, Volcker, Bernanke, and Greenspan, will all be there. Of the three, I think Bernanke has had the toughest hand to play. Volcker had a very tough hand as well there at the end of the 1970s and early 80s.
Well, we'll be talking about all of that next week. And I hope all of you will tune in next week. But that's the Nightly Business Report for tonight. I'm Susie Garup. Have a great weekend. Thanks for watching.
And thanks from me as well. Stay out of the snow. Get out to the stores. Have a great weekend. We'll see you back here on Monday.
Nightly Business Report has been brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant ratings service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
I'm Susie Garup with a Nightly Business Report news brief. On Wall Street today, stocks wrapped up their second losing week in a row. All three major stock averages were down as traders and investors await a crucial meeting of the Federal Reserve next week. The Dow still managed to add 16 points, the Nasdaq rose 2, and the S&P slipped just a fraction. A major merger might be in the works in the telecom industry. Reports say Sprint might make an offer to acquire rival T-Mobile. The deal could be worth as much as $20 billion. And retailers from the Missouri Valley all the way to New England are preparing for a massive snowstorm that could keep shoppers at home instead of spending money during a crucial holiday shopping weekend. Be sure to tune into Nightly Business Report right here on your public television station.